Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
This is where we segue into the nuances between candles and non-Forex, that is stocks and so forth, and Forex. This is a bullish engulfing pattern. That's when a white real body wraps around a black real body. Bulls are resting or grabbing control of the market from the bears. Okay. Now, in a classic bullish engulfing pattern, the open should be below the prior close. What that means is that the market has to gap down on the opening. And as soon as you hear the word gap, you know that's not Forex, because gaps are very rare in Forex. So with a Forex market, okay, when you're looking at any of the ISE markets, this is perfectly acceptable to have the opening the same as the prior close. And actually, even have the opening a pip or two different than the prior close. Because obviously, as you know, there's no central clearing in the Forex markets. And some vendors might have the opening slightly different than another vendor, so we're a little bit more flexible in our definition. But this would be perfectly acceptable in Forex. Opening, closing are the same. So here, once again, in the Canadian, okay, a bullish engulfing pattern, and the low of the bullish engulfing pattern should be support. By the way, most of the candlestick signals, not all of them, but most of them, should be a support or resistance area. So here, below the bullish engulfing pattern should be support based on a close. And it might have closed a little bit under it over here. Once again, there's some nuances I can't get into because of the time factor. But, let's face it, if you have a support area here, and that's on the red horizontal line, and then you have this low over here that I'm just drawing now, even if the market broke under the support over here, or the bullish engulfing pattern, it's still holding the support area from over here. So I'd actually have a support zone over there. But anyway, bullish engulfing patterns. And what this is underscoring is that right near the same support areas, the bulls are grabbing control of the bears, increasing the likelihood of the market rallying. You may view this, and we don't know what happened after, obviously. Okay, so let's say we have this bullish engulfing pattern here. We get rid of all this. Looks like Etch-a-Sketch for you old-timers out there that don't even know what Etch-a-Sketch is. Okay, so here we have a bullish engulfing pattern. Okay, so maybe you say we're in a box, or what Japanese call a lateral range, a box range. So maybe you buy in the bullish engulfing pattern, you do a long call, maybe a bull, credit spread, and then maybe when the market starts moving up, you just, get out of the short position, you stay long the call. But anyway, however it is, I would just do an outright long here because you have a defined stop, and your target is the top end of the box range. Nice trade, and that would have worked out really, really well. So here, again, east and west, or a combination of candles, back-to-back bullish engulfing patterns. Okay, one of the best ways to make money, we're going to look at that. I'll give you the answer to that, and some of you may know that already, let me show you here. This is a descending triangle. Now remember, on the bar chart, on the candle chart, you can use all bar charting techniques. For those not familiar with the descending triangle, this is classic. You have a horizontal support line and lower highs, and it's usually a bearish signal. Okay, but it's not really confirmed until the market breaks under the support area, shown in the red circle. So here, you would view this as potentially negative. The market's making lower highs, but by using the insights of the candles, bullish engulfing pattern, bullish engulfing pattern, bullish engulfing pattern. There is no way you should be selling. I don't care how negative this Western signal is. All right, there's no way you should be selling. In fact, if you're a little bit more aggressive, you could actually think about buying it, because time after time after time, the market had support. We saw the solidity of the support area by these multiple bullish engulfing patterns. And one of the best ways to make money is, if you shorted here, is not to lose money. Okay, so by knowing not to be selling at the support area by these three bullish engulfing patterns, look how much money you would have saved. Okay, so candles not only shine, little plain words, candles not only shine at helping us make money, but letting us know what trades to avoid, right? Now, not surprisingly, the opposite of a bullish engulfing pattern is altogether a bearish engulfing pattern. Black wrapping around the white. Non-Forex, the market opens above the prior close. And Forex, not surprisingly, the market opening and closing are the same. And this is when the bears are taking control of the market from the bulls. Once again, the candles are so easy to construct, but don't let their simplicity fool you. Very easy to draw, but extremely powerful in letting you visually analyzing the shift between demand, this white candle, and supply. Supply is overwhelming demand. Okay, so here, in an intraday, okay, a classic bearish engulfing pattern with the blue arrow. In fact, you should see the session, bearish engulfing pattern, remember, is 2 sessions. Okay, any visual clues before the bearish engulfing pattern that the market, as vibrant as it looked here, was losing momentum? And our eye should all go to the doji over here. Okay, and you make a resistance area. Okay, if the market closes above the doji, okay, decisively above the doji. If you're short, you're wrong. But there's you can think about scaling back on longs here. You know, maybe buying a put for a hedge, because if you're long, you know, let's say you're long. You just trade Forex. You're not doing options, and you just long the dollar. Okay, and then you see this doji. You put on a put hedge, and then when you get the bearish engulfing pattern, okay, either get out of all your longs or just add to your hedge, or you get more aggressive on the puts. Okay, so here we have a bullish engulfing pattern on the left, green wrapping around the white, a bearish engulfing pattern in the middle of the chart. Okay, this is another part of another book I had translated, and just echoing the importance of the psychological aspect of what the candles are showing us, and talking about these combinations of lines, letting us gauge the psychological conflicts at important turning points. So, for example, here, okay, do you think the dollar had problems at 108.50 vis-a-vis the yen? Bulls are in charge. Bulls lost control in the first yellow arrow. The second yellow arrow, bearish engulfing pattern. Third yellow arrow, bearish engulfing pattern. Fourth yellow arrow, a bearish engulfing pattern. You know ultimately the bulls are going to throw up their hands in frustration and just give up. And look what happened after. Okay, this is, once you have the full education, obviously we're just touching on the essentials now. There are a lot of nuances that we won't have time to get into. But this reminds me of a Japanese proverb: if heaven drops a fig, open your mouth. That's one of those times, unless you're in New York, like ISE is located in New York, and we have all those pigeons, you would not open your mouth. Anyway, we have these series of black real bodies, bearish engulfing patterns, right at the same resistance area. Great trade. This one you can think about being highly leveraged on, because the multiple times the market stalled, once again, always having a stop. In this case, it would be 108.50. But this would have worked out really nicely on a long option trade because of the precipitous decline after. Of course, you don't know what's going to happen. You could have all these signals here, but you don't know it's going to fall very quickly. But boy, this is a really heavy resistance area. Right? If I'd only known this, okay? And we'll tell you how to continue your education after this, speaking of had I only known this.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.